Hi, everyone. Thank you so much for joining us today. Before we kick this off, I do want to point out to the audience that we welcome questions. So during today's discussion, please post any questions that you have in the Q&A section at the bottom of your screen. We will address those questions after today's discussion. So I'd now like to turn this over to Harvey Briggs, Force Family Office's Chief Communications Officer. Thank you. Harvey, the floor is yours.
Great. Thanks, Kelly. I'm glad you managed to get that all out. I'm really excited to be here for this discussion today because Scout Discoveries is a really interesting company. They're kind of a rarity in the mining industry. They're vertically integrated discovery generator that operates a hybrid model with in-house teams that are equipped to manage an entire project from its initial staking to resource estimation. This allows for really cost-effective operations. And in doing so, they've managed to really bend the economics of discovery to their favor. Here to talk about that with me today is Curtis Johnson, the president and CEO and director of Scout Discoveries. Curtis led the generation and advancement and marketing of silver and gold projects in the Western U.S. for EMX Royalty Corp before founding Scout and in Idaho. And before that, he held production and exploration roles with Newmont, where he worked at the Leeville and Phoenix mines in Nevada. He has a bachelor's and a master's in science and geology and a PhD in economic geology. Curtis, thank you so much for joining us here.
Thanks, Harvey. Appreciate it. And appreciate everyone who joined the webinar.
Yeah. Before we kind of dig into the meat of this, can you give me like three takeaways you'd like people who are on the webinar today to walk away with?
Yeah. Yeah, I think the first thing that differentiates Scout is we're an American company. Most of our peers are Canadian, Australian, based elsewhere. That's by design. We can get into that, for why that is, but we're American based and we're positioned for US or American listing. Is sort of one key piece. The second, which Harvey already mentioned, we have a very different business structure than basically everyone else in the space. We're squarely focused on discovery, but we've built a new business model around that. And the third, key thing to remember is we're cash flow generative. So we are a revenue generating company. We're here to build a real business. Most of exploration is more you're more like playing the lottery most of the time, where these are non-revenue generating companies. We're here to build a business, and that's what we've built over the last 3 years.
Cool. So can you tell me a little bit more about your background? I kind of touched on it, but talk
Yeah.
about your background and your journey to Scout and how it helped inform what the company is right now.
Yeah, I'm a geologist by background, as you mentioned. I was sort of born and raised in the Northwest U.S., spent most of my career operating here. So that's always been sort of the way that I look at things is from the U.S. perspective. And back in 2010, when I was sort of starting, that was pretty unique. Most of my peers at the time were Canadian and elsewhere, and so that's kind of always been the construct of the industry is natural resources and mining have been very out of favor in the US for most of my career. And it's sort of shifted to Canada, Australia, and elsewhere. Um, so I started off just as an underground geologist. I knew I had always wanted to focus on the discovery space, which in mining, there's sort of two ways that you create value. It's either in the mining sort of broad ecosystem, it's either you make a new discovery, which takes something from a concept up to something concrete in the ground. There's a lot of value that's created both in share price and value in the ground. Or you're mining something and selling a commodity at the end of the day. And so I started off in the mining space because I think it's really important you understand what you're looking for in a really concrete way. So I worked in operations to understand what does a tier one 30 million ounce gold deposit look like. So I worked underground in Carlin, Nevada, which is sort of one of the biggest gold producing regions of the world. So that was sort of my first job working there underground. But it was really in the sense of I knew I wanted to focus on discovery, but if you don't really know what you're looking for in a concrete way, it's difficult to find that. And so that was my initial take with Newmont. Newmont was a great company, but 35,000 employees globally. There's quite a lot of bureaucracy that goes along with that. And, I've sort of always had the entrepreneurial flavor to my spirit, I suppose. And I spent some time there, had good training, but I'd always wanted to start my own company. So after that, I ended up doing a PhD. That was also allowed me to start a company at the same time. There's no conflicts of interest. If you work for a big mining company, you can't start your own exploration company, turns out.
Sure.
So yeah, it was sort of a long transition, really to build Scout, which has been about a 10-year goal of mine. I've been pretty singularly focused on precious and base metals in the Western U.S., really focused around Idaho. That started in 2013 initially, but 2018 is really when we started going after it in a material way.
Great. So give us an overview of Scout, the strategy behind it, and your passion to found it, how it's different from other mining companies today.
Yeah. Yeah, I mean, Scout, again, it's been a 10 plus year endeavor. So you have a lot of ideas when you start. And I think the only real way to build something lasting is to start and then iterate as you go. And that's sort of been our view is we always knew we wanted to focus on discovery, but along the way we shifted our model a little bit. And that's a function of lessons we learned along the way. And discovery is the ultimate value creation here. If our last financing say was at $1.50. If we go to $10, it's because we made a material discovery. That's the thing you always have to remember in this space. But along the way, you have to solve for the fact this industry is really capital intensive. So I'd say the big lesson that we learned along the way and why we've constructed our business around this vertical integration concept is you just need to be more capital efficient than others. You're playing a low odds type game to make these discoveries that are worth, a couple $100 million to a few billion dollars. And there's a few of these made every single year. But it's quite expensive to get there and it's low odds. You need to be able to iterate through projects quickly. And so as we started to advance the company, we realized that it was an advantage the more things that we could do internally. So initially we had a number of geologists, and the fact that we could do our own geology internally, which many of our peers, they hire consultants, they hire contract geology firms. It's just you realize quickly that you can be more efficient and you can do it for less. And so we then propagated that on to the biggest line item in our budgets always is drilling. So drilling is when you're testing the subsurface. You sort of do all your two-dimensional geologic work. You understand, well, here's an area we think we have that there's copper potential. The next thing you have to do is drilling it. And testing a single target is $1 million at a base level. And that's paying a contractor. Again, as we get into this, we started to realize that, well, let's figure out a way to cut out that margin that the contractor's making so we can do it internally ourselves. And on the drilling side, it really is, you can do it for half the cost of someone else. And those are real numbers. We've been doing it for a number of years now. And it's the biggest line item on the budget. So when you're thinking about this, at the end of the day, it's a numbers game. You need to work through a lot of projects systematically and be realistic about the results if you want to find something meaningful. And if you can do that for half the cost, you have much more advantages versus your peers. And so as we built the company along the way, we started to bring more and more things in-house and then started to scale the operations because drilling in particular benefits from economies of scale. So we started from an initial single drill rig that we would advance and move around our projects. So now we operate 5 internally. We started with 5 employees. Now we have 100 internally. And it's a function of understanding the first principles of what a discovery is and what leads you to that, which is getting the geoscience right, doing the geology, doing the soil sampling, the geophysics, getting that right, generating good targets, and then drilling it as efficiently and cost effectively as you can. And it's really doubling down on those. So Scout, as far as we're aware, is the only company globally that's integrated all of this together. And then the last most recent learning I would say is that the product that we've built, which is an integrated drilling and exploration team, is really appealing to third parties. And so we've had a lot of groups want to use our services as a turnkey way to advance their own projects. And so over the last 2 years, we've really doubled down on that because it's a way to minimize dilution along the way. Most of our peers are raising equity capital every single year, hoping on good results. We've built out a business that generated $7.5 million in revenue last year that we can funnel directly onto advancing our own projects, which is less dilution our shareholders need to take on. And so it's been this iterative process over about 10 years, but it really is focused around this principle of doing more in-house because it's more cost effective and it's more efficient, and it allows us to drive towards that discovery much faster.
Right. So that integration not only provides economic advantages, but it's also speed, right? In efficiency, you can do things more quickly through
That's
that.
right.
Got
Yep,
it.
that's right.
So talk about your revenue streams then, because that does sound unique for an exploration company.
Yeah, the way that we talk about, sort of stepping back really to the structure of the business a little bit more and leading to where the revenue comes from, we visualize it in a pretty simple Venn diagram where on the right side of the Venn diagram, say, is our pure exploration services work. So a third party, a junior explorer, or mid-tier major producer who we've worked for in the past, they contract us to come work on their projects. Typically, we don't have any upside in that, but that's revenue generating. We've taken quite a bit of equity in of these junior companies, so we have a pretty good equity portfolio. We've had the ability to take royalties, things like that, but generally we don't have an interest in the project. So that would be most of our revenue sources are from that side. But that's not the core of the business, and that's a really important point that we're not going to take our stock to $10 doing services. We're not here to be a services business, but it's a very important component for relationship building, getting access to other projects that we might like, some equity upside, and then it offsets the dilution. The other side of the Venn diagram is just the pure internal exploration work that we're doing. We have 12 projects. We're one of the largest claim holders in the Western US. We operate at a pretty unique scale when it comes to exploration for mostly gold, copper, silver, sort of in those buckets. But we spend our money on that. So we don't generate revenue that way. And the reason it's a Venn diagram is in the middle, it comes together, which is the core of our business, which is we're the underlying claim owner. And we've recently signed a deal with Centerra, which is a mid-tier gold producer, where we're the claim owner. It's bringing both sides of the Venn diagram together. We own the project, but they're earning in on our project through a joint venture, but they're paying us as a service provider as well. So we capture the discovery upside. They need to spend 30 million US to earn in to 70% of the project. Then we own 30% of it. And they pay us to do the drilling. They pay us to do the geology and all of the work integrated as part of it. So that's where we capture value across the entire structure of the agreement. And so we sort of lean on both sides of this Venn diagram, but the goal is to drive projects towards the middle. So most of our revenue, 6.5 million of that came from drilling, just pure drilling on external parties. We're about to start the first drill program with Centerra in about 3 weeks. So that will be the middle part of that Venn diagram. And then the latter million comes from just pure exploration services work. So as an example, we ran the exploration for Nova Gold in Alaska, which is a multi-billion dollar gold developer at the Donlin Gold Project. So we're heavily involved there. And we work with a lot of different groups to generate that revenue.
Got it. So then, but the big upside revenue for you comes in those claims that you hold, and as those get developed and partnerships get developed, that's where you get the exponential growth in
Yeah.
revenue, correct?
Yeah, that's right. The exponential, growth in value and share price, it will come from making a discovery. That is really what it is. And ideally, that's a discovery that someone like Centerra is funding, and we're generating margin on that, but we capture that upside as well.
Right. So unlike a lot of discovery companies that are just pouring cash into the hole, hoping that something comes out of the back end, you're getting paid.
That's
Someone
right.
else is
Yeah.
putting the cash in, right?
That's exactly right. Yeah, it minimizes the risk on that, which, we've drilled enough holes and enough projects over the last 15 years to know that most of the time it doesn't deliver the results that you're hoping. That's just the reality. And you have to plan for that from a business standpoint. And I think most of our junior company peers, they have one or two different projects and they're doing everything they can to make sure that those results are positive, when the reality is most of the time it's not. And so you end up getting these projects that have a couple really interesting drill intercepts that are very marketable. That's always the marketable thing in news releases are, 150 meters at 2 grams gold or something like that. But it incentivizes doing things like re-drilling old holes. And the problem with that is they produce those news results, but they don't create the value at the end of the day because they often have issues with them. So it allows us to be very realistic about the odds, and it's really the only way to actually get to something that's a tier one discovery that does produce that value.
Right. Yeah. You've got to go through a lot of
Mhm.
projects to find the ones that
Yeah,
really are going to pay off. Got it.
that's right.
So,
Yep.
Let's let's talk about mineral demand for a second. I just want to shift and talk about that for a second because it has changed recently in the US, correct? Are you seeing more demand for domestically produced metals and minerals?
Yeah, that's been the biggest change in my career. I mean, we're all familiar with the term critical minerals, I think right now. That was not a phrase that we used at all in the industry 5 years ago. So it's the fact that, the president of the United States is talking about minerals deals with Ukraine, and there are minerals and mining are actually part of the discussion. For most of my career, mining was sort of the enemy, right? Like we were sort of always it was not viewed as something that should be done in the U.S. It was always viewed as this should be exported globally, and we should import minerals here. And that was always the battle that we fought early on. Was we never believed that. We believe that in the U.S. we do it very well. We have strong environmental standards, and if you're going to produce the metals, you should do it here because we do it the right way. And so the biggest shift that I've seen, just purely from a sentiment standpoint, is it's now viewed as a positive to be an American mineral explorer, and that's in the markets. That's from, some of our partners like BHP and Teck. 10 years ago, they didn't want to be in the US. Right now, they do. That's their preferred jurisdiction to find a copper deposit, say, in the US. And so just there's this broad sentiment backdrop where, the US from a political standpoint on both sides of the aisle wants to bring mineral production back home, and that's going to drive, dramatic increases in domestic production that will, if we can maintain that theme over the next 5 to 10 years, that will really drive the supply from the U.S. And then the demand, in the next 10 years, we'll use more copper than we've used in the entirety of human history. And so just at a base level, we need to figure out a way to solve for that. And the only way you solve for that is you make new discoveries.
Right.
So,
And that demand for copper, where is that going? Is that in upgrading the grid and data centers, things like that?
yep, that's exactly right. Copper is a great example for this because it is the fundamental building block of everything on the technology side. And the other big shift in the world right now is AI. And AI, it turns out, is very power intensive, and it requires massive data centers that are largely wired by copper. And so, I mean, that demand projection, say in the next 10 years for copper, doesn't even include the impacts of AI and data centers. And, not to even talk about the grid in the US that's massively outdated. But, these are all copper wires that are strung from house to house that at a certain point will need to get replaced. And so it really is this, it's the thematic of the electrification of everything that requires copper demand effectively doubling. And then if you layer the AI, the very real impact of AI and what that's going to do in our lives, if you layer that demand on top, it's actually hard to fathom how we're going to solve that on the copper side. But what it's going to take is a lot of companies like us doing the very early stage work, which is basically research and development for the copper producers. That's what we do. We do the early stage R&D. We find the deposits and the projects that have a chance, and that's the product that we sell on to BHP or Teck or Freeport through these earn-in joint venture style agreements.
Great. So given that demand, given the number of projects, are there any near-term value inflection points that you're looking at for the company?
Yeah. Yeah, we have four principal projects. We have a portfolio of 12, and of that 12, we've filtered that down from approximately 100 different projects areas over the last 10 years. So those are the numbers we're sort of working with. You need to go through that scale to get to the projects that have the meaning. So our shareholders now, or someone who wanted to join as a shareholder now, would benefit from the last 8 years of exploration work of us taking those 100 project areas and many, many claims that we've staked and worked through, filtering it down to 12. And we have, of that 12 that are, we hold title to, four we believe have really good potential. And I think you've probably gathered that I'm pretty realistic about, sort of the discovery odds, which is a bit of a counter to a lot of people in this space, which are very promotional. And I am an optimist by nature. You have to be an exploration geologist, but the four that we have, we do believe have real chances to get there. And one of them, the first, is called Cuddy Mountain, which is a copper deposit that's known. It was drilled in the 1960s. It's a porphyry copper deposit, which is the same as what is mined in Arizona. If you ever fly into Salt Lake City, you'll see the Bingham Canyon pit, which is just south of there. That's a porphyry copper deposit. We hold title to a portion of a district, which is an emerging new discovery. It's called Hercules. Hercules owns one half, we own the other half. We're drilling that now, and that has really good odds of becoming a material copper deposit. We don't know ultimately. It will take a lot of exploration work, but everything we've done at the surface and then our initial drill holes are compelling, and that's driven most of the value in our company and most of the shareholders. This is the reason why Teck Resources is a 6% shareholder of Scout, is because of this project. So that would be sort of our flagship there. The value creation from making a porphyry copper discovery is enormous. There's really nothing else like it in the world. The most recent example was Filo Mining, which was in Chile and Argentina, made a major porphyry copper discovery. BHP bought them out for $3.5 billion. And these are the mines that these companies look for. And Hercules and Cuddy Mountain are showing every sign of having that scale in the US in Western Idaho. So that would be our flagship. The next three projects we produced very meaningful drill results on. Both these would be gold and copper deposits. One is in Nevada. It's called Speed Goat. We're drilling it actively now. We drilled it last year, produced economic grades over, we don't need to get into numbers too much, but several hundred meters at 0.5% copper from surface, copper equivalent, which is economic grade in Nevada. So Nevada, we're actively drilling that now. That's adjacent to Barrick. Barrick has several operating mines between Nevada gold mines in that area. So good value creation potential there. And then on the gold and silver side, we're working to advance two projects that have historical resources. So, resources that were drilled or defined, in this case is in the 1970s and 1980s at very, very different metal prices. Gold price would have been $700 an ounce. It's $4,600 today. Silver price would have been probably $5 an ounce. It's, approaching $92 an ounce today. So the next 12 months, 12 and 24 months are us advancing these two copper gold projects, Cuddy Mountain and Speed Goat, and then proving up these historical resources on the gold and silver side to where we can actually materially talk about tonnages and grade. We know that the deposits are there. We need to define them and their scale to see if they're economic and large enough for the Newmonts of the world, the Hecla Minings on the silver side, or the BHPs.
Well, and that's interesting because you talked about your current partnership with Centerra, right, on the one project. Do you anticipate more joint ventures like that? And
Yeah.
how does that work?
Yeah. That is the focus of our business. I would say our top one, two, three projects we keep wholly owned ourselves because the value creation, you sort of have to weigh the equation of should we spend our capital on this ourselves or should we bring in a partner? And sometimes the upside is worth it to spend your capital to maintain 100% because owning 100% of something is always better than owning 30%, assuming that you can capitalize it. And so on the Cuddy Mountain side, Cuddy Mountain being the main project next to Hercules, we've raised $26 million to date, largely based around that project, advancing it and everything in that district. Our gold projects as well, but that's been really the main focus was advancing that and drilling it up to the level that it is. And so as part of that, we've been in discussions with five or six majors and have been for 2 years on that project. If we were to want to take a joint venture there, we have the ability to do so. But right now, it makes sense to continuing to advance it ourselves. But beyond that, again, we have 12 projects. I didn't even mention the Centerra project, which is Lehman Butte, as part of our sort of top four in terms of the torque that it can provide to our story. But we have about 4 or 5 projects that we're in discussions now that we're advancing. There's no promises we'll get them there through these joint venture transactions, but it's very likely in the next 12 months we'll be able to sign a few more of these types of deals.
Right. So then talk about how that relates either to where you go next as a company or potential exit strategies. How does that, what are you thinking around those?
Yeah. Um, I have this core belief that compounding is the eighth wonder of the world. I think that's a Charlie Munger quote, but that's the way that we approach our business is that the more that we can execute over time, the more value we can capture across these assets. And I sort of mentioned the term iterative, several times, which that is very much the way we view it. We work these through the system, and as they get better and better, we continue to advance it. So at a baseline, our corporate goal is to build this company over the next 20 or 30 years. That is our goal, is to continue to compound this over time because I've been a part of companies that have done that in the royalty space. There is a lot of value in compounding a portfolio over time. So that's sort of our underlying uh, fundamental is we're really thinking about decades sort of time horizons, how we propagate this over time. In the near term, Catalyst, we're a private company now. We need to capture this moment in time and get public. This is the most interest I've ever seen from the investment banking side on gold, copper, silver companies. It may be better 12 months from now, but it's exceptional right now. And there's a really good opportunity to take our story public because we are a U.S. company. We operate at a significant scale. We generate revenue. That's very appealing to U.S. markets. And again, that's always been our focus. So in terms of, where we take the company over the next 6, 12, 18 months is really looking at a public listing to start telling our story in a more public way. And then in terms of advancing our projects, liquidity events, there are always the potential for sales of projects. Those can either be reinvested back into the company or dividended out to shareholders. Either of those are potentials. So along the way, though, we intend to build this company over time. That's our business, but we do need to get public when the timing makes sense.
Great. So you did just close a financing round, correct? And how will that capital be used? And what milestones does it unlock for you?
Yeah, we just closed a US $6 million private placement, which was about 75% existing shareholders. So it was really, really using uh, the idea is to use that capital, for a potential listing. So we're working through the process on that, if evaluating that as a scenario, testing the waters per se, but continuing to advance our projects. So the funds will be utilized specifically for drilling at Cuddy Mountain. We're drilling at Speed Goat as well, and so those would be sort of our two principal projects. And the amount of value that can be created from a single meaningful drill hole is pretty exceptional. I think that's the reason most people invest in this space is it can take a company. I mean, Hercules as a perfect example. The discovery in 2023, they went from 20 cents to $3 in about a month and a half on one drill hole, which was a material copper intercept. And they Barrick invested $35 million into him at that point in time. So it's a very unique scenario drilling a discovery hole like that, and you never know when that's going to happen. And so right now we'll have very soon all 5 of our drill rigs will be drilling on our projects. So one at Cuddy Mountain, one at Speed Goat, and then 3 with Centerra at Lehman Butte. And so there's a lot of potential for the discovery upside, and that will inform, what does a listing look like. But it's the 6 million that we just closed was really to just ensure we can move through these drill programs and then evaluate a listing along the way.
Great. Then what other near-term financings do you have that you need to work on?
Yeah, I mean, we're always open to long-term thinking shareholders, and sort of the reason we're doing this fireside chat and sort of working with you guys is trying to meet more private investors that believe in this space, that believe in a longer-term vision, understand discovery, and so we're always open to that in terms of between now and a public listing and or when we're public as well. But over the next 12 months, there are reasons to keep it private if we wanted to. So it always comes down to alignment of values for us. Like if someone wants to invest in us and be guaranteed a great return in 6 months, that's probably not the right fit. That may happen, but what we want are people that believe in compounding, believe in exploration as the pursuit of value creation in this space, and we're always open to strong investors that have those views with us.
So given that, then why should family offices specifically be paying attention right now to what you guys are doing?
Yeah, I think the backdrop of minerals in the U.S. is a theme that's here to stay. And I don't think it's just this administration in place. It was the previous administration really kickstarted it. I think this thematic will be sort of on the decade timeline that we're looking at because it is the thing about mines is they take a while to permit and they take a while to build. And so you need that long-term horizon to justify the investment that mining companies will make in the U.S. And we have the bipartisan support for it. So from an investment perspective, the thematic is probably going to hold true for a while. And you just want to be in that early because prices of everything are going to go up. I mean, commodities have just been at gold, copper, and silver across the board have been. It's actually hard to believe the levels that they're priced at these days, and that I think we're in the middle of a rotation into real assets and commodities. Over that decades long time horizon, particularly an American centric one, and Scout we've been here for a number of years operating as a U.S. company. We were one of the first to do it. And I think our story is unique in the scale that we operate and how well we are positioned for those thematics in the U.S.
Great. So really you're talking about this sort of generational investment. It's, with the compounding, things like that, that it could serve someone and a part of their portfolio for the long term.
That's the idea, exactly. It's probably the closest comparable from a macro standpoint is 2000, 2001. That was the flip from, that would have been maybe the end of the internet bubble, I'd say, like the high growth phase that existed largely in the US in the late 80s through the 90s. And, the flip side of that, the commodity space was brutal in the 90s. Like you did not want to be an investor in that space. But starting in 2000, 2001, this was the China super cycle really driving commodity prices. Gold price went from 250 an ounce to 18, $1,900 an ounce, right? And if you were early in that, you were very well positioned to take, to compound your investment, number one. But in companies that operated at scale, especially early on, you had a lot of upside ahead of you. And most of our large shareholders are of the opinion that it's early days in the next cycle, because 2011 to basically a year ago was really tough in the commodity space. It was really challenging. The thing about discoveries is they do always matter if they're big enough. It doesn't matter if you're in a bear market or a bull market, they do matter. But if you compare a tier one discovery with a proper bull market, there's not much like it from a value creation perspective.
Right. Right. It looks like we have a number of questions from the audience, so I'd like to bring Callie back in and she can facilitate those.
Absolutely. Thank you. Um, so let me get here. Okay. So let's get into those. So, given that Scout targets multiple metals, how do you prioritize programs in volatile commodity markets like now? How does this shape investor returns?
Yeah, that's a great question, and that's actually the core reason we focused on multiple commodities is that it's very advantageous to be a gold company when gold does really well, but the reality is gold doesn't do well every year, and so we've structured around three main commodities, but five in general. So gold, silver, copper. We do a bit in lead, zinc as well, and that's partly because those commodities in the geology in the Western U.S. they often occur together, and so we we have always wanted to de-risk our story in terms of if gold is doing really well and copper is not, it doesn't make a lot of sense to advance big copper projects, as an example. So we have the ability internally to pivot to various commodities if it makes sense, and you'll see this often in the junior mining space, like a publicly listed gold company will change their name to a lithium company in 2 years because lithium's doing really well, and then all of a sudden lithium's not doing great. Well, now we're going to be a uranium company, and I've just seen this dozens and dozens of times. We don't need to do that. We are a discovery company, and we focus on a series of commodities that some years are good, some years are bad. Typically, gold and copper trade inversely. That's actually why we focus on those two predominantly. But we want to be positioned to be able to capitalize on any one of those commodities along the way.
Great, thank you. You mentioned shares, but you're private, correct? Is
Yeah.
the exit strategy an IPO?
Near-term liquidity, that is our strategy, is an IPO. That's right. Yep.
Okay, thank you. And how significant is drilling revenue relative to your core discovery budget?
In terms of how much we expend on our internal projects. So right now, we generated 7.5 million in revenue last year. We, at that scale, operating 5 rigs, that was 3 drills, mostly on contract, external contracts through the year, and then 2 on our own projects. At that scale, the math works to self-fund our own drilling. And so, operating in that way, and that's the way that we like to do it, where it's the drilling division is effectively break even when you factor in our revenue and then the money we spend on our own projects drilling. So it depends on how we structure the business. We can burn through capital quite quickly if we want to, just purely drilling on our own projects, which would be the standard operating model of most of our peers is, sort of doing that. But we can pull the lever back and do peer services and be a profitable company. So, we can run the company on much less than $7.5 million a year if we're not advancing our own projects.
So Idaho is mining friendly, but how do you assess and mitigate permitting, environmental, or community engagement risks as you ramp
Yeah.
up?
Yeah, the best way to do that is have a portfolio of projects because some of those risks are unknown at the beginning. And that's as you advance projects, you learn more about what's in the ground. You learn, is this an open pit style deposit? Is this an underground style deposit? I would say the main focus of the last 10 years is in Idaho in particular, but we've operated in Nevada a lot as well, is figuring out the places where you have local community support for what you're trying to find. And that's, we don't even look at the geology first because geology can be really appealing, especially to a geologist. A big gold vein somewhere that can make you often overlook some of the community issues that you might face. And so at a base level, we meet with local communities to understand if do they want us there, and then we meet with the permitting agencies because we're often working on federal or state land. Idaho and state land is very supportive at a base level. That's not a concern. And we work on the Bureau of Land Management, BLM, or the Forest Service, and it depends on which office you're working with. So there are regional offices, and some forests across the western U.S. are not supportive at a base level of mining, and so life is too short to try to advance a project through an agency like that. You're not going to have the regulatory support you need, and you often don't have the community support as well. What we found in Idaho are the other big industry in Idaho is logging and timber. And what we found as a good first pass filter is where there is significant logging operations, which is most of northern Idaho, western Idaho, and parts of central Idaho. There's broad-based support for minerals because the regulatory agencies understand surface disturbance, they understand road building, and the communities are often built around these natural resource industries, mining and or logging. And so the short answer is we think very deeply around this, but the reality is you don't always know until you get into it, which is why we have a dozen projects that we move forward at any one time. You don't want to have your main projects and the 4 projects we've been working for the last 5 years continuously, so we know there's support there. You don't want to have your main flagship asset not have a path towards production. And so we think a lot about that from agencies we work with, communities we work with, but it's a core value of ours.
Great. Cutty Mountain being drill ready, what is the timeline for permit approvals and what are the key technical targets you aim to test first?
Yeah, so we're Cuddy Mountain's permitted for drilling now. We've been drilling that since October. So we are midway through our 10,000-meter phase one drill program out here, and permitting took about 8 months. We started that in would have been November of 2024, and we received permits in about August initially. And so we started drilling seasonality, rig availability. We started drilling in October. We'll continue that. We will continue that all winter. We'll drill for the next 12 months is our baseline plan. And that's what the last financing was to help fund that as well.
And how does the speed goat outcome and other non-Idaho projects fit into your strategic focus on Idaho?
Yeah, it's our strategic focus is the Western U.S. in general. I think Idaho and Nevada are the two most favorable places to advance projects. We will expand out from that. There, we're working with other partners, mining companies on other states in the Western U.S., but you need to have reasons to go there. We know for sure that Idaho and Nevada are supportive. So we've always operated in those two jurisdictions. The reason we have more projects in Idaho is the opportunity when we started in 2018 was much better. There was a lot of available open land. There were very few groups looking there. We were one of the contrarian groups that viewed Idaho as permittable at the time. There were others that didn't, and that turned out to be wrong. We turned out to be right that it was permittable, moving projects through. And Nevada, we put just about as much effort into. It's just there are probably 300 junior companies that operate there and multiple producers. So there's very little available land. So there were not a lot of projects that were good enough for us to stake open ground, which is usually the way that we go about acquiring projects, is we acquire them ourselves. And so Speedgoat's kind of always been part of this broad-based Western U.S. focus. Speedgoat's a robust discovery. It's a discovery we made in 2022 initially, and then have advanced in 2025 and are drilling it now as well. So Speedgoat is probably our nearest term catalyst for a proper drill discovery and a resource that has potential to be economic. So we'll continue advancing that pretty aggressively.
Thank you. Can you work with Indian nations?
We do. Yeah, we do. Actually, our VP of Corporate Development, Amanda Irons, her background is in Native American relations. So that's actually where she started her career, was working for the government on relations with various tribes and various reservations, helping develop natural resources. So this is another one of our core values is, taking care of our neighbors. Neighbors are local communities, but also local tribes. And so we try to operate in places where they're supportive and they can benefit from the employment at a base level, where it is somewhat of a win-win type scenario there. But it is really important that we take care of that, especially as you advance projects through various stages of drilling. It gets very important that you engage and you have that open discussion and dialogue.
And what key milestones trigger a partnership? How do you balance exploration risk with capital efficiency?
That's a great question. The We are always talking with anywhere between 6 and 12 different companies about our portfolio. These would be major mid-tier producers, many names you would be familiar with. We keep our data rooms well curated, so data room, all of our projects, all the data, and we keep those pretty open. So we always have the dialogue going. And at the Lehman Butte project with Centerra, I mean, that deal was 2 years, 2.5 years in the works. We had shown them around the projects, discussed it. That project got up to a level, we had done enough targeting work to where it fit their criteria where they wanted to do a joint venture. So that would be on the other party side. On our side, it really depends on what the scale of the targets are and what the capital required is going to be. And Cuddy Mountain has been the unique exception where we've been able to capitalize that very, very well, and that's because the target and the upside is pretty exceptional there. We have some gold projects we've drilled that the results have been good, but it hasn't captured the market attention, and so those projects will look for partnerships, and we're in discussions for. It really depends on how good is the earn-in joint venture deal, and how does that compare to the capital that we can either self-fund, we have funding that we bring in from our services work, or external capital, which one makes more sense? And that ultimately comes down to our board and how we go about allocating capital between projects.
Thank you. And is success based on the commodity super cycle?
No, no, not at all. That's just a benefit. We've built the business to be successful in the worst bear market you can imagine. That's actually why we have the drilling division and everything internally, because we've been in a place where markets are tough, there was no investor interest in our story, and we were able to generate revenue and keep the company going. And that's another core principle, that you need to survive through the downturns to benefit from the upturns. And so the company at a base level is structured to be profitable if we want to be, if we need to be. And we've built out enough of a partnership network with various juniors and groups that we can generally attract third-party contracts if we need to. But I think I mentioned it a little bit earlier, but a meaningful discovery, a tier one discovery, always moves the needle in bull or bear markets, because the big mining companies are usually, they're not immune to them, but they usually operate counter-cyclical, where in the bear markets they're trying to acquire new projects. And so if you find something very good in those more tough times, there's almost always a buyer for it.
Great. Well, that concludes the questions. And I just want to point out to the audience, if you have additional questions or want to be connected to the team, please reach out to me. Everyone has my email address. Also, the team here will have your information and will be reaching out. But Curtis, I do want to turn it back over to you for any final words before we close out today.
Yeah, thank you. Number one, I just appreciate the time and the fact that you're interested in our story. And this has been a decades-long endeavor for us. We believe in it more than anything, and I think right now is at least the most unique time in my career from an American exploration perspective. And I think if you look into our story in a bit more depth beyond just this fireside chat, I think you'll see that we've constructed a very different business, and we operate at a pretty unique scale that we can capture a lot of the upside and what looks like the beginning of the next super cycle here. So yeah, thank you for the time.
Great. Thank you so much, and everyone have a great day.